Good morning. We meet once again. Today is the 2nd of December. We started a new month, and there's a lot of news and a lot of expectation from this month. Nour, let's start with basically the dollar index. As I'm looking at the dollar index, I can see on the weekly chart that the dollar is kind of like suppressed or trading within certain barriers in a sideways manner between, let's say, 107 and 100. We're still trading on the sideways, and we tried to break that channel, or like, let's say, the sideways channel last week, but we were not able to do that. So it looked at the chart, on the chart like a false breakout. What do you expect from the dollar in the coming week or so, let's say from now till at least a month, because the dollar index is the leader of literally gold, FX, and everything else?
I mean, last week we saw the dollar index basically taking a little bit of a breather after the recent rally that basically continues for over 4 weeks. But at the same time, on the monthly chart, we did not actually break that sideways, which is to be expected from one side, because again, this channel has been, or this sideways is basically lasted since more than 2 years. So a break above that, or a break of that range, is not going to be something easy to be done without a notable catalyst. So that's from one side. The other side, yes, we have this week, we have a lot of economic data, especially the labor market, which showed multiple times over the past few weeks that we have some sort of a weakness, but this weakness needs to be confirmed within the next non-farm payroll. But on top of that, you should not also disregard what happened also over the weekend, and even during last week, when basically Trump's the talks about the tariffs from 60% to China to now we're talking about, it went down to 30%, and now we're talking about 10%. So in addition to that, the picks of the Trump's campaign and the next, as an example, the Treasury Secretary and the representatives to, or the trade representative, basically is telling us a different story. He's telling us that Trump might not actually be that aggressive when it comes to applying new tariffs, and this is basically what pushed the dollar once again lower during the week, because last week, again, at the beginning of the week, we saw a notable decline by 1%. So I think for the time being, the market will need to concentrate more on what is going on today, not what's going to happen at least after January inauguration. And I think we can still see the dollar index going down towards 105. That is actually a possibility before we talk about another trends or to regain the 107 once again.
All right, so we're going to wait and see. Obviously, the market is watching Trump closely, but as far as we remember, Trump is full of surprises. So, and he likes the volatility, and he creates the volatility in the market. So whatever he's doing at the moment, it's been overpriced in the market. But despite that, any sudden move now that he's gonna take, I think it's gonna affect the market a lot. Let's take a look and move to the gold. Let's say gold. We can see that the geopolitical tension is not affecting gold anymore in the same way as it should, as if this is something that is usual, and it doesn't matter anymore to the audience, to the traders, to everyone. We know that basically whatever is happening, or the war that started in Lebanon, there's a ceasefire. Hopefully we're going to have the same for Gaza, but at the same time it started in Syria again. We have some escalation in Russia as well. The promises of Trump of stopping the war in the Middle East, plus in between Russia and Ukraine, still did not happen until now. So there's a lot of disappointment from the market. We noticed that gold is trading 2,629. Goldman Sachs, JP Morgan, Bank of America, most of the big banks, they priced gold for 2025 around 3,000. Of course, each one of them would add 100 or remove 100, but it's all around the $3,000 in 2025.
I think gold, for the time being, we are still within the same within the same outlook. We haven't seen, let's say, like a break of the major outlook. This is basically another short-term retracement, especially after the the recent rally that almost got us to 2,800. But at the same time, I think the geopolitical tensions is now, it is still there. There's nothing basically has changed except the ceasefire. But at the same time, ceasefire in Lebanon, and then we've got a new escalation in Syria, but that might expand. Who knows? But regardless, gold will still need a little bit more time after the recent rally. I would say the support remains at 2,600. A break of that will take us 2,550 or maybe 2,500. That is a possibility. But as long as we keep on holding the 2,600, there's a notable chance that we go back to 2,660, even 2,700 is highly possible. Who's looking for next year? I mean, it's still safe to say that 3,000 could be a major target. At least it is a major target for multiple banks or multiple major banks around the world. 3,000 is still in play.
Yeah, we still have a lot of time, actually. A lot of things can happen in that time. So briefly, that's the same view as well for silver, despite how suppressed it is and how we're trading currently at the support level between $29 and $30. The major trend is still up, and the whole thing is still kind of the same.
Good thing about silver, it's just only the monthly close so far is still above $30, which is the one that we need to keep an eye on the monthly. As long as any monthly close is above $30, there's more the possibility of a much higher price will be basically the probability is much higher than before. As long as we keep on hold or keep holding or getting more support by the $30, I think there is a possibility for 35, or even next year. There's a lot of banks talking about $40.
That would be amazing, actually. I'm long on that. Regarding euro dollar, this is a subject that is affecting a lot of traders. We've seen a lot of traders make good money out of this, and we've seen a lot of traders hit their stop loss with the sudden move down after the breakout. They weren't expecting that, and then we've seen the talking about the parity in euro dollar. Currently, the trend is down, and we still did not do any break of that trend. We did a small correction, which is fine, but until now we still didn't either break the 106, and from the other side we didn't break the 103.3 or 103.4, which was a historical support as well since 2016 on multiple levels. So are we going to continue with the same, let's say, levels? We're going to keep on trading on the sideway because economy in Europe is not the best. We've seen all the issues that the dollar is having, and we're expecting dollar index to do a small correction. I'm not saying it's gonna go down, but at least a small correction. So how is that going to affect the euro dollar, at least for the coming week?
At least for the time being, there is a lot of factors that is affecting the euro. One side, you have also what is happening in France and all the talks about the budget. At the same time, the far right are basically threatening to topple the government, or that's basically not helping that much. But if you look at the monthly close, we still did not break that range of the 2-year range, and this is something that it's hard for me to say, yes, let's go short euro from 105. Maybe we would go to the parity, but I still have to wait and see a clear break below the 105 on the monthly, not only just on the weekly, because so far we haven't seen a clear weekly close below that. We haven't seen a clear monthly close below that. So I would say there is still more the possibility of a higher euro going forward from here towards maybe a 106. I mean, we got the 106. We might get to 106.60s, 107, and even 108. That could be a possibility before we see the euro even changing its trend. Other than that, I think we could basically still continue within the same range, unless if the Federal Reserve decided to pause cutting interest rates for whatever reason. That would be one of the catalysts that would push the euro towards the parity. Yes, other than that, I still believe the euro is still strong within the same range. as long as we keep on holding above 105.
All right. Last thing that we need to discuss is basically the US indices. We can see, okay, there's a lot of demand. There's a lot of volume of investment on the US indices. And at the same time, I think the expectations is exaggerated to a certain extent, the same way as we were discussing at the beginning of this outlook. Trump has been overpriced so far. And at the same time, the belief in the US is like overpriced. But at the same time, this is the best infrastructure in the world. Like the US has the best infrastructure in the world. So if I'm not going to put my money in the US indices, where am I going to put them? I can see as well the big banks, all of them.
You wouldn't buy here at record high.
Well, yeah, I'm with you. But at the same time, until now, most of the discussions that the banks are having and most of the evaluation of stocks, of metals, or whatever it is, they are getting it right. And this is historical data. So we need to trust the system a little bit, right? And they are all
definitely there's
S&P to be, they're all expecting S&P to be 6,500, Bank of America 7,000. So it's like they're adding on the top of that. So what do we do on this level? I understand every time we say we are at the top, would you buy at the top? But man, every time we get a new high, every time we get a new high.
That's right. I mean, go back in history again. And you can basically look whether if it's a fundamental or technical, every time you get the same move that we're seeing now, it will be followed by a notable retracement. It would be 5-7%, sometimes 10%. Last time it was 20%, but 2 years ago it was 35%. So I have to trust the process regardless. But at the same time, one of the things that people need to understand is now what Trump is saying is something, and what might happen on like in reality might be something different. Now, earnings were good, guidance were a little bit just basically cautious. There's something to be expected because of Trump and the whole story about AI being able to generate a new revenue stream for all the companies. It worked for some sectors, not all the other sectors. So this is why you'll have to basically just a little bit cautious. Now, if you're going to look for next year, yeah, there is a possibility for 7,000 in S&P 500, but this needs to basically be carried out with solid fundamentals from one side. If you have a trade war, you're not going to have 7,000. If you have tariffs of 30 to 60% or 100%, just like what Trump is saying, this is not going to happen. We will have some sort of a severe correction. That could be. But other than that, I mean, the Federal Reserve will have to also be very cautious with what Trump is saying. But again, whatever happened last week, I think this is good because the market is basically toning down the ideas of Trump and the ideas of how he will be basically implementing all the tariffs. Based on the picks that he picked, Treasury Secretary and the trade representative, markets are kind of relaxed. But I think at some point we will see that correction. 5 to 7% would be ideal before we even talk about start positioning again.
So let's just say at the time being, let's do a lot of hit and runs to take advantage of whatever move is happening.
Yeah, you're in December. You have 2 weeks left only.
As much as you can to be with the lower risk.
Yeah.
All right. So anyway, Nour, we have a lot of data for this week. We have the job openings. The second part of the week is going to be the interesting part, to be honest, with the non-farm employment change. Powell is going to speak on Wednesday at night. All this data will show us more clarity regarding the decisions that we're going to take. Follow us, continue with the webinars with us, and you're going to have all the clarity that you need. I wish all UAE happy National Day, and we'll see you next week.
See you next week.
Thank you.